Hey guys, it's Steve Lamothe, the founder at Elevate Realty Group, and I can't believe that January is almost over. We are just flying through 2025, and my goal with our educational videos this year is to break down some of the things that you don't often hear about. And today, our first topic in that series is going to be what is PMI, or private mortgage insurance, and some cool tips around it so that you can use this to your advantage moving forward. I can't tell you how many times I've had buyers tell me that they're gonna wait and try to save up money so they can get rid of PMI, and I think they really misunderstand what it is and how it works. So what is PMI? Private mortgage insurance is an insurance policy that the lender forces or requires you to get if you do not have 20% down. This came out of the 2008 financial collapse where a lot of people defaulted on their mortgages. So the banks now have this insurance. If you were to default and not make your mortgage payment, the lender has an insurance policy that repays them the mortgage balance if you default. Some key things with PMI: it is based on your loan amount, so those dollar amounts change based on the loan product you have. They usually range between $200 and $400 a month, and they only apply to conventional or like FHA loans when you put less than 20% down. So the common mistake I see people make is they might have 10 or 15% to put down, but they want to wait, let's say another year or two, to save up that 20%, so they drop their PMI. The challenge with that is the waiting that you're doing is costing you money because the market appreciates faster than the overall monthly cost of the PMI. Some key things if you have PMI already, right? Remember this. If you have PMI already and you've owned your home for more than 2 years, it would be worthwhile to check what your loan balance is versus the value of the home that you currently own. If you have more than 20% equity, you're a good candidate to drop your PMI and actually reach out to your lender or servicer to request an appraisal. You might have to pay for that, and then request and submit for dropping the PMI. If you have more than 20% equity, then they are required by law to drop your PMI. This is really important. So going back to the question that people ask is, should I wait to save up 20%? I argue that you should buy as soon as you can to start building up that equity and start building up that forced savings. And then in 2 years or 3 years, you should have more than 20% equity and you can drop your PMI. This is really important to understand. I hope I broke it down well for you. There's some other requirements here on some specific kinds of mortgages. We can pay off the mortgage insurance up front. This is why it's important to meet with a professional and an expert from the very beginning. As always, if you're interested in buying a home this year, call us at 916-436-SELL or visit homesbyelevate.com.